So how did I make $732 trading Apple call options? So looking at Apple, 626. 626 at 940, 626, 940. So let's see. 940. So 940. So basically I played Apple call options and yeah, 626, 940. So let's see. Right here. So basically this candle right here, I played Apple call options, and basically what I did, I'm pretty sure I bought Apple call options after it got rejected by the 9-day moving average. I was confident that it would bounce off that 200-day moving average, and that was my last time buying Apple call options. And then the next day I sold out at 1310, basically the next day, and that's how I made $732 trading Apple call options. So let's look at 1310. Let's see. Let's see. 1310, right? So 1310, not this one, but this candle right here. So yeah, I'm pretty sure that I bought Apple call options, confident that it was gonna bounce off the 200-day moving average, but that did not happen. And so I was just like, okay, I'm gonna just patiently wait and see if there could be some sort of rebound later on throughout the day. That did happen, actually. And then you can see then in the pre-market, Apple the next day, right? The pre-market hours, Apple finally, the 9-day moving average managed to break above all of the other moving averages, and pretty much the moving average, the 9-day moving average specifically, was hovering above all of the other moving averages. And so I should have sold as soon as the market opened, but I was not gonna lie to you, I was a little too greedy. And so I was just like, okay, maybe there could be a possibility that throughout the day Apple could retest that previous high of the day of anywhere from 203, or at least anywhere in 202.50. And so that's when at 1310, which is this 1330 candle, I sold out the position, and basically that's how I made $732 trading Apple call options. So this is what I mean by, you gotta be how do you say, like, not be greedy. If you have the money in front of you, take the money that's in front of you, don't be greedy, and just move on to the next trade. So let's see if there's any given opportunities that we could talk about, or that how you could have maybe possibly traded today. Let's be random. Let's do PG. So I guess Procter and Gamble. Let's see if I can make an example out of Procter and Gamble. Okay, so Procter and Gamble is a little weird, but here goes nothing, right? So basically the 9-day moving average was above all of the moving major averages, and so then at one point Procter and Gamble could not break further. It could not break the 9-day moving average, saw a rejection, and then it just started crashing down. So a way you could have played Procter and Gamble options here personally would be, let's see if I can draw on the, not here. Can I draw or no? Or did they take that? Oh no, it's here. It is here. So let's see. So in this case, what would happen is that you wouldn't be able to use the moving averages as your entry points in this case. So here's what I would do. I would just honestly wait for, I would just wait for the market to make a little bit more movement, right? So me personally, I see 159 being the support level of PG. And so basically what I would do is that, okay, I see that it used that support level of 159 not once but twice, so here and here, right? And so what I could have done is on this 12 candle, I could have gotten into PG call options and just basically waited for PG to approach the 159 support level. And then after seeing a bounce off that support level of 159, I would sell out the position as soon as it reaches the 9-day moving average, which reads 160.10. So on the 1330 candle, as soon as I see Procter & Gamble approach the 9-day moving average, that would be my selling point. So basically you can still use the moving averages as your, whether it's to time your entries or to time your exit points. So in this case, you could have used, the moving averages as your, in this case, as your selling point. So that way you're not struggling knowing that, okay, should I take the money and just move on, or should I still hold? So that's how personally I would play Procter & Gamble. Basically, I would be like, okay, well, I'm kind of seeing that Procter & Gamble isn't really, using the moving averages. It's kind of like, if I were to see this during the day, I would honestly see it as very choppy, but what I would do, I would draw the support level, my personal support level that I see of Procter & Gamble approaching. And then after seeing Procter & Gamble approaching that support level, right, I would buy call options, wait for a bounce. And then I would just, like I just explained to you guys, I would use the moving averages, which is in this case the 9-day moving average. As soon as Procter & Gamble approaches that 9-day moving average, I would sell out the position and just move on to the next trade. So that's a way how you could have, possibly traded Procter & Gamble if you couldn't use the, the moving averages as your entry or exit points. But in this case, I did use, support level, my personal support level that I saw Procter & Gamble at a specific spot. And then I used the 9-day moving average as my selling point. That would be my exit point to get out the position, take my profit, and just move on to the next trade. So as always, this is not financial advice. You can use this free website called finviz.com. It is totally free. You can make your own watch list and you can analyze that list of stocks that are that could be an opportunity to play either calls or puts. So that is pretty much it. This is not financial advice. As always, take care. Bye.